Good morning and welcome once again to Raleigh Academy. Mr. Chinedu, I see you. Morning, welcome again. My name is Victor and I'm going to be your host this morning for the market review where we make daily profits, right? Right now we have very few in the meeting, so I'd like us to exercise a little bit more patience for others to join in so we can have a wonderful review to avoid going back and forth, all right? So just let's hang in there for a few minutes. Let others join. Thank you for your patience. Welcome for those who are just joining. So we are just trying to wait for more persons to join in the call before we start the review. To avoid going back and forth, right? So yes, so some persons complaining we don't have audio yet. It's intentional. We're just trying to wait for others. Okay. Thank you for your patience. Good morning once again, and welcome. I usually don't like, so there's actually audio, right? So let's start off the meeting right about now. I think others will just come in and join us um, in this particular review this morning. I said my name is Victor, and I'll be taking you through the review. Okay. Good morning, Mr. Chinedu. Good morning. Nice to have you here again, and every other person. Nice to have you here. So let's look at what the market has for us today. So we go to the markets basically to buy and sell in order to make profit. So then for us to do that, as buyers, we are looking for reasonable prices to buy. As sellers, we are looking also for reasonable prices to sell. The aim is to make profit at the end of the transaction. So how we are going to do it now depends on how the market is for today. You don't control the market. You don't determine price. You only follow if price is good enough for you to buy or price is good enough for you to sell. Now, there are a number of ways or a number of things that affects the market, like I usually say. We have the variables. Variables are things that don't happen all the time. They are not constant. They don't happen all the time. They come once in a while. They happen once in a while. So we have things like fundamentals. These are economic, political news, social, environmental, even hazard. Things like that can affect the market. But we are mostly focused on economic data that have great impact on the economies of which we are trading their currencies. These are developed economies, and they look at data. Data shows them how viable their economy is per time. So these data are what we use to determine if their currency is going to be strong for us to buy or is going to be weak for us to sell. So for today, being Wednesday, the 20th, 30th of October, 2024, we've had that of Australian dollar. So we see that the news came out generally bad. The actual was less than forecast. So it came out bad here. And that means since early hours of today, Australian dollar most likely has been weak, and possibly even to this moment. We're looking out for Euro all day, German prelim CPI. That's the consumer price index. But we don't have the final CPI yet, so this is just a prelim CPI, and it's going to be an all day. At any moment, we can have the actual. There's no specific time for it, all right? So, but mostly, since Euro is traded in the London session, most likely might have it coming up during the London session before noon. All right. And we have CHF, the Swiss National Bank Chairman, Schlegelmilch speaks today. And this is not a data news, hence you won't see figures here. It is just based on hawkish or dovish. Now, based on what the chairman is saying, it can be good. When it's good, it is called hawkish. It means there's a likelihood that the Swiss franc can become strong. Or if it is dovish, means whatever he's talking about is not good for the Swiss franc. Hence, price will go down. So these are ways we look at this news. Now, if you're not an economist, you don't understand some keywords being used. The autocorrelation, the multicollinearity, and especially the heteroscedasticity with all of these currencies, you most likely might not be able to interpret what they are saying. So I prefer personally to trade data news, all right? Then also for today, we're going to be having the ADP non-farm employment change for the USD by 1:15 p.m. and also by 1:30 p.m. the advanced GDP, which this one is the quarterly advanced GDP. So the dollar has some moves to make today, either strong or weak, or to the upside or to the downside, as the case may be. And lastly, for today, I'm just talking about the high impact news, the one in red envelopes. We are going to be having the Bank of Canada, Governor McCallum speak, rather. So Governor McCallum is going to be speaking by 9:15 p.m. for the Canadian dollar. So These are the major fundamentals we have for today. But also, don't forget that tomorrow also, we are having that for JPY, and most especially, we are having that for NFP on Friday, right? So traders look out for opportunities like this in order to make profit. And that is about the fundamentals. Let's quickly head over to the charts. Now, for the fundamentals for today, we want to see what we can get before 1:15 p.m. for the ADP non-farm payroll and advanced GDP for the USD, and also for 10 a.m. for CHF, right? And 9:15 for Canadian dollar. Let's see what the market posts to us for today. So let's start from the EUR USD. The EUR USD. Euro USD. So basically, Euro USD has been on a downward trend for a while now, and it doesn't look like it's going to stop. Although, if you look at price critically, price has gotten to a possible place of demand, right? This low right here, this low right here, price has gotten to this low. Hence, it's trying to respect that particular position, okay? So, but if we look at price right now, we don't yet have a serious market structure shift, like a serious one, a significant high and significant low. I wouldn't want to consider this as a retracement. This was the last high we had. Now I'm just talking about market structure basically. I want to know this was a high, a low, the same high, equal high, right? Now market structure, this was a low here. Now retraced, came back. Now it took out this particular low. And the high that took this low was here, right? So this was a high that took out this particular previous low we had over here. Now, which gave us a new low at this level here. Now, if you see that this high is being protected, price has not broken this low to give us that continuation of a downward movement. Neither has price broken above this last high to give us a market structure shift for us to know, okay, price is now tending to the upside. We are just having range, which is natural, which is normal. Things like that happen, right? So, for instance, the projection is price most likely to still come back all the way down to possibly this level right here. Oh, why is my cursor not picking it? Okay, so we are looking at selling off price all the way down here. Although, if we have to look at it critically, this is our supply level here. We still have where sellers were still interested in this market from this level here. All right, so we can have our sell position here, and you just have your stop loss somewhere above. Now, if it takes out your stop loss, if price takes out your stop loss, it means that price is changing direction and price is going to the upside. So we can now start looking for long positions. We can start to buy Euro USD. So for now, we are selling Euro USD. For now, yeah, we are putting a sell on Euro USD. All right. So putting a sell on Euro USD, I'm looking at price coming all the way to this low right here for my TP, and I'm looking at price all the way here for my SL. So this is for Euro USD. Now, because it has been a downward trend, price is just trying to range. Now, we expect that it possibly can take this low, but remember from our 4-hour time frame, when we zoomed out, we found out that there was a previous low right here. Price is trying to respect that low, right? So that's why you are seeing that range up and down. So it can still break out below, or continue to go upward. That's why as we are selling, we also have our stop loss right there. So Euro USD, I think, is just basically straightforward for this morning. Now the USD card, the opposite is what we are experiencing right now. The USD card has been on an upward trend also. You can see clearly massive upward trend for a while now. Now, is that upward trend still going to continue, or is it about to end? I usually look at my higher time frame in order to determine this. So I go higher. If I can't get anything, I go further higher. Okay, I see a previous high over here. Now you want to know when when price has been trending, going in one direction, it won't do that forever. It will turn at some point and start going to the downside. So Should I keep buying it now, or is price most likely to turn and start going to the downside right now? So you need to go to a higher time frame to find out where the previous resistance, previous major resistance has been. So I found one resistance here. If I go even to my daily time frame, you'll find out that I have more resistance at this level, much more resistance. All right. So if I zoom out, this is how it looks like. So does it make sense for me to keep selling, for me to keep buying USD CAD as of now? Does it make sense? This is an open question, please. I would like your response. Does it make sense for me to keep buying USD CAD from what I just showed you? I need your answers, your responses on the comment so that I know we are together. I'm not just doing this analysis alone. Sorry about Euro USD. I didn't ask any question. Okay. Only one person? No, okay. No. So because of the resistance. Okay, exactly. All right, thank you. But it doesn't mean I should just rush and start selling this guy. Yes, because it doesn't make sense for me to buy. Doesn't mean I should just go and start selling. Now, as much as price has been a resistance right here, let me go back to my daily time frame so we can see it again. As much as price has been a resistance down here, there's always an end to everything, right? So price at some point will take out this resistance. Either we'll take out the resistance to the upside, or we'll take it out from the downside. Okay. Price will take out this resistance from the upside or take it out from the downside. So one of those two is bound to happen. But is it going to happen now? So let me look at how price, the last time price got there, did it give us a massive supply area? Yes, it did. It did actually. It did. It gave us a massive supply area. So I am possibly not looking out for a buy on USD CAD. I'm looking out for opportunity to sell. And funny enough, I have equal high right here. I have a previous resistance at this level. I have this resistance here, and I have a lot of liquidity lying around here, right? A lot of liquidity lying around here. So I'll be looking out for a sell. Now, some persons can go in for sell. Some other persons want price to still go back inside of this resistance area for them to sell. Or alternatively, we need price breaking below this level right here. Price need to break out below here. Or let's say below this level right here. Once it breaks out, because you notice that after hitting this resistance, came all the way here. This is the lowest point, went back again. Let's see if it will come here, because it can keep doing this until it breaks out of this level, the tight range, right? So in other words, in the long run, we are possibly looking out for a sell, and price should be able to come to this level right here. So that is my projection also for USD CAD. Now, as much as you are doing that, I hope you know you need to still have your stop loss somewhere above, right? You still need to have your stop loss somewhere above in case price says, oh, this is the time I want to go higher. I really want to break this resistance. Then it's fine. Then we continue looking out for long positions. We keep buying USD CAD, right? So this is for USD versus the Canadian dollar for this morning. I'm just trying to go through our currencies. I don't want to spend too much time on this review today. Now, this is NZD USD also. NZD USD is similar to Euro USD. Now, for you to buy or sell, you need confluences. You need something to tell you if this guy has been going up or going down. Market structure. Yes, one step at a time. Allow to listen and see. We're going to get there. We are looking out for currencies now. I don't want to go to currency indices, come back to currency commodities. No, currencies, commodities, indices, or currencies, indices, commodities. When I'm done with currencies, I'll move to something else, right? So this is NZD USD. Now, clearly, you can see that it has been on a downward movement too, right? For a long time also. It has been on a downward movement for a long time. So is price most likely still going to continue that downward movement? You go to your higher time frame, you zoom out, look at it. Okay, there's a previous support level right here. And it doesn't look like price is trying to respect that support. It doesn't look like, because price is just breaking below it. That's one. Then secondly, if price is not stopping at this level, then it is most likely aiming for this next level here. Most likely aiming for this next level. It has this place to stop here, and most likely it's going to end up at this level here. I usually look out for round figures. Round figures. By round figures, I mean if you look at the current market price, it's, let's say price is at 0.59710.717, right? I like the last three digits for me. I like it to be 000, if possible. The last three digits. So let's see where the last three digits can be. Give us 000. Okay, 001, which is very, very close, right? So price might come to this level right here. Now, there's a sentiment to doing that. That is not what we are talking about for today, right? So price like taking round figures and the likes of it. So in order to move. So we can have a reaction here, but most likely price will get all the way to this level before we possibly see another upward movement again. Now, how do we now attack the market? We have seen what is most likely to happen from the uptrend. Okay, so let's see, where can we sell from? If you want to sell, you need price to go higher first, right? For you to have a good price. So let's look at our market structure. So we had a low here. Sorry, we had a low point right here. Price came all the way here. Then price retraced to this level right here. And after the retracement, you could see price still coming down. So price is not really going very far from this. Excuse me. Price is not going very far from this previous low right here. All right, see this previous low? Price is not really going very far from it. Okay, so one of the two things can happen, right? Now notice that price has not really gotten even close to this previous high. It has been tending down, 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 right? So if I'm going to look at this market critically, let me see if my trend line can give me something good. Okay, let me see if trend line can give me something good. From here, okay, so if I go to my 1 hour, all right, you can see that's been bouncing off this level right here. Now, price is at that level again. Price is at that level. I need to see the strength of my currencies. For NZD USD, price has gotten to that level. As much as this is where the high is, that means price can still work its way all the way up to this level, isn't it? Good. So now, but if you notice, price went, after doing that retracement, went high, couldn't go far. Went high, couldn't go far. It's just tending more to the downside, tending more and more to the downside. So we are going to possibly have a short sell right now for this guy. Some persons can enter for a sell. And if you want to wait for price to go all the way back to this level before you sell, then it's yours. But if you are selling now, your stop loss will most likely be up here if you don't want it to stop you out. And if you want to be very conservative, if you sell here, your stop loss can be just a few pips higher, anywhere around this level, anywhere above this previous high, anywhere around this level. So basically, we are still looking out for a sell because price is still going down. Now, if you sell from here right now and price is not going down, then price can go all the way up here before starting to sell. In other words, in the long run, you still end up in profits. Right? In the long run, you will still end up in profits. Okay, so I think our Euro USD is in profit already. In the long run, you're still going to end up in profits. So that is for NZD USD. You can either sell where current market price is, or you wait for price to go all the way up, price going all the way up to this previous high here, which it has not done for a while, right? For the last few days, price hasn't done that. Now, before price can turn all the way back here or even break this level and continue going to the downside. So this is what is most likely going to happen for NZD USD. I can see. If the price goes above the trend line, is it not a breakout? Yes, Adewale, it is a breakout, but a breakout inside a bigger structure. This is what you are seeing inside this previous high, this low and this previous high. These are the external structures. These are the outer structures. Whatever is happening inside here are the inner structures, right? Which are the minor structures. The major structure is this low and this high. These are the major structures. Everything inside, they are minor structures. Price can decide to just come, all the way straight down or be doing zigzag before going down. It doesn't matter whatever happens inside the structure. What we are most likely going to be looking out for, right, is where are we mostly going to take up trade? The reason I drew trend line is the fact that after price got to this high, this retracement, I've been expecting price to come all the way down straight to take out this one. But it came here, and notice that every single time it's retracing, the retracement keep going down and down, keep going lower and lower and lower. It's almost becoming like a falling wedge pattern. It's almost becoming like a falling wedge, right? So now, alternatively, there's also another strategy I use to trade the trend. There's also another strategy, right? So perhaps this might be when that will work. So when I have a downward trend and price got to this level, I want to apply my fib from my swing high to my swing low. This has been the lowest point here. So I usually like waiting for price in between my 50 and 61.8 retracement levels. So I have my 50 and my 61. So in between my 50 and 61 retracement levels, I'm going to be waiting for price to retrace back there for me to have an opportunity to sell. So you notice that this level is just lying a little bit above my trend line, which means price can do a false breakout before coming to the downside, right? The price might do a false breakout. So I have like a double confluence. My trend line is just above it, and my point of interest for me to sell, given a strong trend like this, is also just slightly above it. So yes, the sell is most likely going to happen around this level right here. The sell is most likely going to happen around that level. Okay. So this is for NZD USD. GBP JPY, clearly an uptrend. I'm just going to do GBP JPY and maybe one more currency. GBP JPY, also one of my favorite. I think most of my trades since last week, not just last week, but most of this month actually, most of this month has been GBP JPY, US JPY, gold, most of them. And you see that I think since this month, I've only had one negative trade on GBP JPY. That was because it took my stop loss but still went in my direction, and I still followed it. So just one negative out of like more than 15 to 18 trades right there about that I've taken with this guy this month. So it's one of my favorite actually. So GBP JPY, if you look at it also, you notice that it has been clearly on an uptrend, clearly in an uptrend, right? So it means that we are looking out for opportunities to buy. So I had my previous high right here. I had a retracement all the way to this low here. Then my high was taken out. This high was taken out around this level to give me another high. Excuse me. To give me another high right here. And after doing that, it came also to give me a low right here again. So now price is looking out to take my high to take this high out, but price has not given me some reasonable retracement. Now, what I do basically, and which I think is ideal, now is what I do, and I find it to be very ideal because when I started applying it, it helps me to avoid losing trades. Okay, is the fact that when price breaks above any previous high, I need it to be significant. It's not just small, right? So notice that this was my previous high right here. Here. Now, when price took out the high, went above it, you could see that it gave it some distance. It gave it some distance right here, which is good. That means I have a new high, and then I waited for retracement. Here, I have a new low. Okay. Now, price started going to the upside again. Now, on this occasion, it looks like price has taken out my previous high, right? But the problem is it is not significant enough yet. So for me, this movement is still a continuous. So I shift it. I shift my high. This is still my high. So I use Fibonacci for this particular instrument a lot. So I apply my Fib from swing low to swing high, right? My Fib level from swing low to swing high. Let me take all of this out so that I won't confuse you. But I'm sure you understood what I was saying when I was talking about my high and low in an uptrend, my high and low. Okay. So because that is more like your compass around the chart. It's like your compass around the chart. If you don't have this, forget about that journey. Most likely the journey is going to end in a very wrong direction. You're going to find yourself in no man's land on this chart. So you need to know your market structure. Your market structure helps you to have a clear bias. Now, why am I looking out for buy? Why am I looking out for sell? I'm looking out for buy because my market structure is telling me that price is going to the upside and it's taking out every previous high, taking out previous highs. So that is why when market is trending to the upside, you don't want to be selling at resistance. You don't just want to be selling at resistance because it has a very high chance of breaking above resistance and continuing to the upside. So after drawing my Fib from swing low to swing high, I usually have a point of interest, which is in between my 50 and 61.8 retracement levels here. So I'm waiting for price to come to this level. I'm waiting for price to come to this level before I can buy it. So somebody might be asking, if you are waiting for price to do a retracement before you buy, that means you're expecting price to come down, right? So why don't you sell? No, I don't want to trade against the trend. It might be dicey. You never can tell how far it will go before it comes down. Meanwhile, if I'm selling this guy now, and you want to have your stop loss here, it's most likely might just turn back and keep going forward. So for me to buy, I need to look for price to come back all the way to this level right here, okay? Before I can take my buy. And most likely, I want to see if I place a buy here and price continues going to the downside. It means I'm in negative. I have a drawdown, right? So for instance, I might wait to see if price will get all the way down here. Now, there is a strategy I use to trade if price does not respect this particular level here, which is from this move from my low to my high. Do I have a significant order block or a demand zone? Because I'm clearly buying. Price has been buying, more buying, right? So you are looking for demand. Demand constitutes more buy. So I can clearly see, I look out for where price did significant push to the upside with either decisive or what I call explosive candles to the upside. Now you can see this candle is an explosive candle, a candle whose body covers at least nothing less than 70% of the total range, including the high and low. If I zoom in now, you'll see that this whole candle, if you consider the range from the high and the low, the candle itself, the body covers more than 70%. This one, we can clearly say if it doesn't cover 70, it covers more than 50, which is a decisive candle. This one covers more than 70, which is also an explosive. So I need to see massive candles consecutively, at least 3 to the upside in context, right? So then I marked the candle just before the move started, which is this one. This was the candle that started this. So this is a drop-based rally kind of movement, right? So I will have this, the high to the low of this candle, then I extend it to the future. So I have another point of interest right here. So if price comes all the way down for GBP JPY and it doesn't stop here, I won't be too quick to just close it or say, oh, my stop loss. I know that the distance between here and here is not that far. So I will just hold on to see if I'm going to be having a reaction from here. Now, once price does not respect this level and it breaks out even out of my low, which is 100% retracement, breaks out of it, then I close that trade. It means most likely price is no longer doing an uptrend. Price wants to start doing a downtrend, right? So if we look out for a 4-hour time frame, is price most likely going to stop here? Or possibly, but not significantly. We had a low that gave a retracement here, so it's not a significant one. So most likely price continues going to the upside. Okay, most likely price continues going to the upside. So this is what I'm expecting for GG. If you want to trade retracement, you can place a sell. I don't do that, right? So let's lastly USDJPY. Lastly, okay, these were my trades also for USDJPY. You can see my point of interest. I bought from here. I bought from here also. Yesterday I bought from here. Yesterday I did, and I was, thank God, like my TP was at the previous high. So please, this, let's have this muted. Let's see. Let me mute. Sorry about. Oh, thank you. All right, so I still have my, sorry about that. I still have my FIB, my Fibonacci levels, which this level right here, which I was obviously buying from and supporting my trend line. So you can see that I had my trend line right here. Let me take this out so we can. I had my trend line also drawn from that level. So you can see that it coincided also with my trend line before the buy took place. And here also from swing low to swing high, you can see that it's in between my 50 and 61.8. So you can see that I waited for price to get here before taking the buy. That was it on Monday? Then yesterday also, now price was going up. Now the interesting thing is this: when you buy, we are expecting that all things being equal, if that uptrend still is going to hold, then price is expected to get back to this high. Is expected to get back to this high, this level here, right? Let me change the color of this guy. And since price failed to get back to that high, so I was buying from here, targeting this particular high. It didn't get there on that day, but I closed it out when price started to range. Now, when price got back to this level, I also used my moving average to continue that movement. So another buy at this, no, I think it was just when price closed above 21 to this level, all the way here. So price finally got to that level. Hence, for the fact that it has gotten here, two things: it has not taken out this previous high, so it wants to look for more liquidity, which it can find possibly below. Now, price is still moving along my trend line. So if I continue my trend line like this, make sure I'm correct. So if I continue my trend line like this, so there's a tendency that price can give me a buy around my trend line here. That's one. Two, inside of this movement, I have 2 points of interest. One is here, and you can see the same pattern we are looking out for. Explosive 1, 2, 3 explosive candles to the upside. The candle before it, let me take out this one. I'm at the high to the low. Okay, you can backtest this stuff. You see it happens a lot. Now, why? I'm not possibly waiting for price to return to my 50 and 61.8 because it has been mitigated already. Price has done it already. So it might not come back all the way there. So it will keep pushing all the way up till it breaks out this high and continues going to the high side. So what's possibly going to stop price from turning back to the downside? No, price still has a lot of room to cover, right? So it still has a lot of room to cover going to the upside. So we are still actively buying GJ. Sorry, UJ rather, USJPY. We are still actively buying. So I just want price to come to my trend line for me to take my buy. Alternatively, you can have your buy. If it doesn't buy now, you wait for price to get to this level before that buy happens. In other words, in the long run, price is most likely going to keep buying. It has not broken out of my trend line for a while, so I don't see price breaking out below my trend line. I don't really see this happen, right? So a buy is most likely going to happen for GJ. My moving average periods are 21 and 50, both exponential. They are 21 and 50. The red is 21 and the blue is 50. So the red is 21, the blue is 50. Both exponential, both exponential. Okay, so let's quickly now move to other instrument. You're welcome. So let's see gold, for instance. Gold has been clearly like massively bullish, massively bullish. Every single opportunity price retraces to the downside. Gold, people, they buy the dip. This is more like buying the dip at every single turn. I might not have a good trend line here, but it's worth trying. Now, for those who don't really know how to draw trend line, you need to understand that drawing a good trend line, it entails picking just the first 2 points, the first 2 areas. That means where that movement started from and the first time price came to a particular level. Once you can pick those 2, just extend it. It doesn't matter if it fits in future or not. You are being truthful to that trend line. You don't want to be biased in drawing your trend line. In other words, you don't know what price can. Price respect the first 2. So for instance, this was the first time. Let me scale this back. This is what I mean. I started my trend line from here, right? So this was the first time I had this hit right here. So I mean, once I can capture first and this one, I'm good to go. Just extend it anyhow. So you can see that it fits right here, right? It fits right here, fits right here. So it means that any day, anytime, I have a massive drop for gold, my trend line should be able to hold price for. Oh, sorry about that. I need to go back and draw this. I think my cursor moved it a bit. Okay, I think we are still good. The trend line is still good. It's still good. Okay, so every opportunity that gold has to pull down to the downside, you can see that it quickly rallies back to the upside, rallies back to the upside, obeying trend lines, moving average to an extent. But if you want to use moving average with gold, I would suggest you use the 4-hour moving average, H4 moving average. I think to an extent, price respects the H4 moving average way more than the H1. For gold, for me, I use my H4 moving average to trade gold. I want to see when price is bouncing at my H4 moving average, not just H1. Not just H1. So for instance, now, if I'm waiting for price to come bounce, now you know that moving averages are dynamic, so I wouldn't want to have a line here. Price might have shifted from this moving average. So this is, in case price comes to bounce, this is where my H4 moving average is. And this is where my H1 moving average is right now also. So now there's a coincidence. So I would possibly want that double coincidence of price coming when my moving average also coincides with my trend line, it becomes way stronger, right? Way stronger. So even if price breaks below your moving average, your trend line should be able to hold. Below your moving average, trend line holds, right? Until price is back above moving average. Now, let's look at what happened yesterday. I could see a base rally, movement. Now, I prefer two explosive candles to the upside, but I have just one, right? Just I prefer three, but I have just two. One, two. But in context, those two are large candles, which might still do since gold takes opportunity to buy the dip. So the candle before it, I extend it here and it works. Now, if you ask, why am I not using my Fibonacci here? Well, from observation, gold most likely does not respect my Fib level as much as those other instruments respect my Fib levels. Okay, so that's why I'm not using my Fibonacci. I use demand and supply, mostly my order block for gold. Then my moving average, my H4 moving average, if I also can have a trend line, which I have right here, is what I use to trade gold. So what am I expecting? I'm expecting, I don't know how it's going to happen, but I'm expecting gold to drop all the way to this level before I can have some good confidence to buy. And at the same time, if gold can come to my 4-hour moving average, my 4 hours moving average, anytime gold gets to my 4 hours moving average, I am also ready to buy. Now, I won't be shocked if gold takes this level here because there's a particular strategy I also use, liquidity levels, where price has ranged. And when that range is happening, it's giving me wicks. So something like this. Yeah, gold can do this. But this is more like a risky trade. It's a risky trade. If price doesn't buy from here, if comes here doesn't buy, hope you know that there's a significant space between here and my moving averages on 4-hour time frame where I'm expecting and my order block here. So it's going to be massive drawdown for me. I don't want that. Okay. But some persons can buy from here. It can respect it, especially if you're looking at your lower time frames, your 15 minutes time frame. Yes. So you can have a buy from here. And if you don't have a buy from here, the only other place I can have a buy is all the way here. So this is for gold, right? We don't have something very significant, very clear for gold right now. We need to be a lot patient for gold. So someone said D40. Sorry for the delay. So let's quickly head over there. Okay. Now, this guy clearly, it's upward trend, 4 hours, your daily. Sometimes you can have some significant retracements for them. Okay, let's see. Trend lines are subjective. It just gives the trader a feeling of self-satisfaction. Okay. Emeka Longinos. Yes, they are subjective. You are not wrong, but if you really know how to use them. For instance, my trend line is not the basis for which I will buy. Clearly, price is an uptrend. I just want to see if price is respecting a particular order when it's going to the upside. That's one. Also, it is not, it is just like a last result, a confirmation, a last result. It's not the whole thing. I'm not basing my trading on trend line, okay? Because I know trend line on its own, price can break in and out, in and out. So it is not the basis for my analysis. It is just something supporting my analysis. Like I have plans, I have backup plans. There's a saying that plan your trade and trade your plan, isn't it? So I have my plan already and I have contingencies. In case I am buying here and price is not buying, what is most likely going to happen? Is it going to continue selling or will it just go down a little, give me drawdown before going back up? I want to know everything. Okay, so I can know when price is going out of order, out of control, then I close my trade or I just allow my stop loss at that level to be taken out, right? So yes, D40. Now I can clearly see from my daily time frame that price is still pushing to the upside after we took out this resistance here. You know, price took it out, respected it, and is still up. That means that this can be a reference point for support, which is on the contingencies from here. In case I have another massive movement to the downside. All right, so where is that level? It's still all the way down. So we most likely might not be experiencing that today. So for now, I can see that price is taking support from this level right here. But do I have areas of demand? That pattern I talked about. Three massive candles to the upside. For instance, let's back test it. I have this, I have this. Now, they are not three, but in context, they are two, but each is very, very massive, right? Which is good. So if I draw the candle before it, which is this bearish one, the high to the low, and I extend it to the future. This is what I usually do. I wait for price to come back and touch, then I buy it again. If I know that so price has mitigated this level. In the movement to the upside, do I have that same pattern? No, I just have one here, one. So this is what I call the rally-based rally movement. All right, also base drop rally movement also. Now, what do I mean? If I take this level again, it might not be that significant, but I have some confidence that that level should be able to hold price. See this level? So this movement to the upside, the candle before it from the high to the low, I extend it to the future. All right. So guys, we have two levels here. Although this one has been mitigated, but yes, there's some liquidity still there. So overall today, I expect D40 to be bullish. D40 to be bullish for today. All right. I expect D40 to be bullish for today. So we can have a buy or we have wait for price to get to this level. But price has mitigated this level. That means it has come to that level and it has respected it. So it's like a second-hand level, right? This is a fresh level here. Oh yeah, it was mitigated a bit, but no, it's still fresh. It's still fresh. So price will most likely buy from here. And if you are buying from here, there are different points of targets. I can target one, then I can target two to the upside. Okay. So that is for D40. You're welcome. US 100, US 100 also. I think I'm just going to be very fast here. I'm almost out of time. I think I have another meeting by 9. The same thing, I like looking at it from the higher time frame first. My daily, let's see. This is the most recent significant low, all right, which is not far from here. Most recent significant low, most recent significant low. Okay, so you can see that price is tending to the upside. So if I have a pattern, can my trend line give me something? Okay, so if I'm going to use this guy right here, and I have the most recent low again right here. So price is clearly pushing to the upside, to the upside, to the upside. So let's see if we can take advantage of this particular movement, right? Now, what do I need? Remember that pattern I told you, right? Continuous movement to the upside. So this is a rally or rally-based rally pattern. Okay, now, this particular movement to the upside, you can see clearly I have 1, 2, 3, but significantly. So if I mark the count of that particular movement to the upside, you will see that I have a whole lot of indecisive candles here. So you'll clearly see that waiting for price to come back to it. Now, it didn't really mitigate it here. This was where the mitigation happened, right? So that means this was where price really tapped into it, and you can see significant buy to the upside, right? Now, it's looking like it's taking out our previous resistance level. It's taking out our previous resistance level. The movement to the downside is not a supply movement. So I want to continue buying this guy, but I need some form of retracement for me to buy. I need some form of retracement for me to buy. And I need to wait for price to come back down again. Guys, I need to wait for price to come back down again. I don't have a clear line of sight for US 100. So it is not every time price is good enough for you to buy. I don't think I can give any point right here for us to buy US 100 at the moment. No, I don't think. Okay. Yes, sure, you can. You can. AY, you can. You can. Right now, yeah. So that is, let me see, AUDJPY. Okay, so but basically, I might just wait for price to come back into this my level here. Let me see, let me see, let me see. I don't have a clear line of sight for US 100. Okay, the only line of sight I still have is okay. So I have a rally. You see these indecisive candles? They are base, but there are plenty. Okay, so I don't have a clear line of sight for US 100. No. For us to continue buying, we need to wait for price to drop back. Now, can we sell this guy? Yes, we can sell it. We obviously can sell it. But the challenge is this guy is threatening to be an upward trend instrument. So based on my principle, I don't sell. I don't like to sell. I don't advise selling when price is in an uptrend. I rather wait for that sell to happen before I buy again, right? On US 100, I don't think we have a good trade right there. So if you have taken your buy on USJPY, you should have been some profit already. Okay. And then one more, AUDJPY. Someone has been asking AUDJPY. Let's see. I've never traded this guy. So, like never. Let me see what's happening here. Okay. So we're having, I'm trying to determine my market structure right here. Okay, my market structure is still choppy bullish. And if I'm going to have a trend line, I need my trend line to be nothing less than 45 degrees. Okay. So you can clearly see that trend line took it out, went in and out. So I don't have something good for my trend line. I don't have. Now you can say, why don't I put my trend line this way? Not really. I have, this is the second time price made a touch. So I should, my obligation, pick it this way. So it clearly shows that my trend line was taken out around here. Retrace, he wanted to hold it around here, came back inside, in and out. So I'm not possibly going to be using this trend line to trade. So my market structure is giving me movement to the upside, but the retracements are quite significant. Like, quite significant, right? If I use my FIB, you see that from swing low to swing high, you see that if I'm waiting for price in between my 50 and 61.8, you see I have some good drawdowns before price give me profit, and it's clearly heading towards the downside. But all you need to know is that for AUDJPY, irrespective of how price moves, pay attention to, this was a low that gave birth to price breaking this previous high to giving me a high here, which is, sorry, which is here. Now, whatever happens in between this level, low, and my high is my internal structure. It doesn't matter how price goes. So worst case scenario, price can come back to this level. But what I don't want to happen is price breaking below this level to the downside. What it does, what that means is suggesting that a market structure shift. Price is changing from an uptrend to a downtrend, right? And also, if I can confirm, is it most likely to go down at this moment? No, not likely. Price most likely should continue going to the upside. Okay. So yeah, on this guy, my projection is price continues going to the upside. Now, besides, if we look at this, what has happened here, so you can see that I have this pattern right here. So if I draw this one to this level right here, you can see. So yeah, we are bullish for AUD JPY. Most likely we are bullish for it. But don't forget to have your stop loss. So a buy is good. So I think that is how far we can go for this review this morning. Sorry, couldn't take more instruments. Sorry about that. But I hope you benefited today. I hope you've seriously benefited from this review today. All right. So what else again? D40. Okay, clearly pushing to the upside. JPYT pulling back to the upside. All right. So I hope you have a wonderful and a peaceful day today. So thank you very much for your time. Next time I'm taking this review, I promise I'll be able to take some other questions. I'll have enough time to take questions. All right. Thank you very much. In the absence of any other thing, see you next time. Sorry, Chinedu, in the use of trend line, you are focused more on the first and the second point. Where the trend line starts is your first. The next time price give a significant rejection is your second. Every other thing does not matter. You just extend it, right?